Hi, this is Dave and welcome to the weekly market recap, closing out the week for Friday, January the 17th, 2014. So I'm going to take a little bit of a different approach this week and just look at the markets that we were interested in last week, starting first. So in last week's video, I mentioned that I was interested in gold, crude oil, and natural gas. Those were the only charts that were really interesting. So let me just make sure I have the proper chart here. So we're looking at the gold futures. This is the gold futures on the daily chart, and let's just take a look at it. You can see that everything is still intact here. We have this sort of developing trend line here, where we're touching these lows, these lows. We came down and we tested those lows going back on Wednesday at this trend line here, and we're just we have a very tight stair step higher. So if you look at this, essentially what I'm looking at is let's just take I want to parallel this line here, new parallel, and it seems like we're just stair stepping higher in a tight sort of tight channel. And I'm going to zoom in on the chart here a little bit. So I still like gold from what I'm seeing on the chart into this zone. So that analysis has not changed. This yellow box zone here, let's just move it over a little bit now that the chart is sort of developing. But you've got a zone here anywhere from 1272 with a potential high side of 1324.61. So anywhere in this zone here, the 50% retracement would be the first target, all the way up to 1294, and then if we can get through that, 1324. So that's what I'm looking at for gold. Let's look at the we might as well look at silver since we're here. So silver is not really giving much back, and it just keeps stair stepping higher as well. The chart looks a little bit it looks more sideways, but sideways with a slight upward grind. If you look at the momentum on both gold and silver, they're both getting into the overbought territory, which I didn't really want to see this early on. Let me go back to gold. Gold's already overbought, but if it starts trending, it can stay overbought for quite a long period of time. And if you look at the MACD, we have zero line resistance on the MACD here. So we'll need to keep an eye on that, see if we can, keep climbing to the high side. The other market that I liked last week was natural gas. So if you look at natural gas, we were talking about a break of, let me just grab the pen here. We were talking about a break of the high of this bar here, right in around $4.09.5. So that was sort of the trigger. We gapped right above that going into Monday. We had a strong move. We had a strong move on Tuesday, Wednesday, Thursday came all the way up to $4.50, and then we came down and closed around $4.32. So that one worked out actually quite nicely in terms of, it was hard to get into it because it gapped above the high here of that bar. It actually gapped, but you got a nice move from, let's say, $4.10 all the way to $4.50. That's a 40-cent move, which is a pretty big move in natural gas. That's about, I believe that's about $4,000 per contract in the futures market. So that was a decent, a decent move in the natural gas. Where do I think it'll go from here? Well, I'd be looking to see if we could get a retest of these highs for starters, somewhere around $4 and what's that level here? $4.59 all the way up to $4. Let's call it $4.60, somewhere in and around this level, which would be a retest of these highs right in here. So, maybe we can grind our way into this level, with over the next couple of weeks. And let's take a look at the other market was the crude oil. So let's look at the crude oil futures. And the crude oil futures, we had to move off of the low. We had to move off of this low. This low bar held. We're getting a momentum shift in the stochastics back up to the high side, and now we're finding resistance at the 21 exponential moving average. So we came into about $95 a barrel. We closed at $94.59. And you can see now what we're doing is we're trading between the 8-period moving average and the 21 exponential moving average with these doji bars. If we were to get a break if we were to get a break of this doji bar here, a break of the high, then I'd be looking for continuation into 95.30 and 96.33, and then see if we can really, get something going to the high side and retest possibly some of these higher levels around 99 or $100. So that's what I'm sort of looking for. I think we still have room and momentum here to go a little bit higher. You can see a loss of the downward momentum pressure in my trending indicator. So if we could get, we've still got, if we could cycle this all the way back up to the high side and then see where we get in terms of levels when we start to get overbought in momentum. Hope that makes sense. And if we look at, let's look at the USO as well. Okay, so the USO, same sort of story. It looks kind of the same, and same analysis in that. And then if we look at, let's see, so we looked at gold, we looked at natural gas, and we looked at crude oil. So those were the markets that I was interested in last week. With the crude oil, just one other comment: as long as it doesn't break this low, this low bar, I think I think that this move is still in play. We could come all the way back and retest it, and sort of mess around. But as long as we hold this low here, I think that the crude oil I'm more bullish than bearish on at this point in time, unless we break that low bar. So let's go into the analysis of the stock index futures. So we didn't quite get a pullback into this zone, but we did get a pullback. We've got this this sort of bull flag going on here, and we're not really pushing above it. We started to probe above it on Thursday, Friday, Wednesday, Thursday, Friday, but we haven't gotten above it. And one of the things I'm looking at, I'd really like to, in order to get back on the bullish side of the Dow at least, I'd really like to see us break out of this flag here to the high side like we did back in this area here, where we had that one wide range bar, and then that caused us to, that precipitated a pretty substantial move higher. Now we're just pulling back and looking to see if the same thing's going to happen. But until and if that happens, I think that this is a dead market until we actually start to break out of that that pattern there. So if we look at the S&P futures, the S&P futures are trying to do the same thing. We did have the same kind of bull flag pattern. Let me just draw that in here. We had the same sort of bull flag pattern happen back in this area here. Let me just draw a parallel. So somewhere in that area there, same thing as the Dow, and now we're doing the same thing. It looked like we were going to break out decisively, but we didn't quite get there. And then if we look at the Nasdaq was above its highs and broke to new all-time highs this week. When it came into not closing highs, but it broke to intraday highs. New all-time intraday highs on, I guess that would have been Wednesday, and then Thursday, and then Friday we stayed in that in that upper level there. But you can see we didn't really get a decisive close to to give us the confidence that we're actually really going to go higher. That being said, we're finding resistance at those higher levels, but we're finding support right down below that around 35.71. So we'll really need to see, what happens going into next week to see if we can break these highs and start trending back up to the high side, or if we're just going to meander in this area. We'll need to see, what develops. Let's take a look at the Russell. The Russell was the same story. We had an initial break of these highs, and we did, closed above it for 2 days, and now we're just, we closed right at that line in the sand of the highs. So the Russell and the Nasdaq look the strongest, and the Dow and the S&P look a little bit weaker. And then last week we were talking about, the transports. We were still looking for a deeper pullback, but the transports were actually, pushing to new highs. This would have been this day here, which was the Friday. And we were, we had closed at new all-time highs last Friday, and you can see where we ended. We ended right, a retest right of the high of, that prior swing high. So this is, not really telling us a lot. It's not really giving us anything, but it's not really giving anything back either. So we'll just need to keep an eye on this and see if we're going to return, to a bullish bias. All of the stochastic indicators are overbought, but having said that, they can stay overbought for long periods of time like they did in this area here. So hope that makes sense. Let's move on to, let's see, we already looked at some of the metals. We looked at crude oil and natural gas. Let's look at the dollar index. So you can see the dollar index is kind of off to the races here. It's above 80. I keep forgetting this level. 80. I guess that would be 80, 86 support. We, last Friday we had dipped below it and we closed below it. Now we're back above it. You can see we're putting in higher highs and higher lows, and we're above that level. So I'm more bullish than I am bearish on the dollar index. And then if we look at the euro came, remember last week we were talking about the euro, we weren't getting above 138, and I said we're probably just going to, I didn't quite call it ping pong, but we're just going to jump levels, I think I called it. So, we tested this level here at 136.83, and look at where we closed, right into 135.23. We closed right, at this level here. So you can see that, when the market's trying to find direction, it's not really going higher. It's just sort of looking for areas of liquidity. And these are pretty key levels. And you can see it's just sort of, testing those levels and bouncing off of those levels. So there's not a lot going on there. I'm more bullish than I am bearish on the dollar index. On the euro, I'm just sort of, conversely, I should be negative on the euro, but I think the euro is just going to come down and test, maybe this trend line or maybe 134.20. But I don't really see it giving, all of this up move back. I could see it maybe coming in and retesting this low around 132.82, let's say. But, it's just sort of ping-ponging between these levels. It's not really doing anything truly incredibly directional, or it's not really truly crazy bearish or anything of that nature. So it's just not a very interesting market for me, to be honest with you. I think it's just going to keep jumping those levels. Let's take a look at the USD CAD. So the USD CAD came all the way up and came very, very close to this really, this key $1.10 level. So let's see, $1.10 is right there. We just came very close to it, and it's just sort of going sideways now, and it's not really giving anything back yet. So this, this has been a long-term analysis going back all the way from the break of this wedge, so going back, probably a month or so, or maybe even longer, back all the way into the middle of November. And it's finally come up and hit some of these higher targets. I don't really have an opinion on where I think that this may be going at this point in time. So I'm just looking to see if we're going to, get above $1.10, or if we're going to come back down into some of these support levels around 108, all the way into 107, or if we're just going to push higher. So this move is essentially done, and we'll need to see where it's going to go from there. Let's take a look at the bonds. So you can see the bonds caught a bid this week. They put in this sort of double bottom, and they've just been pushing higher. I think we have the potential to, let's see, where do I think these could go? I think we have the potential to maybe get into, I'm not even sure what these fibs represent anymore, so let me just delete them. I think we have the potential to get into maybe, okay, well, we're right into the 50% retracement of this high to this low. The 618 comes in around 131 and 26-30 seconds. So I think if we test that level and if we can get through it, then I'd be looking for a retest of this high around 134. And so basically what this means is the bonds are back in play. And if we look at the interest rates, first let's look at, that's the 30-year. Let's look at the 10-year. 10-year, same story. I think we could, let me delete some of these fibs because now they're confusing. And let's look at some of the retracement levels. We could get a move from this high, this low, into potentially 125.08. And if we can really get something going above there, a retest of 126.25 would make sense. And then if we look at the let's look at the 10-year interest rate. So the 10-year interest rate failed at 3%. You know, that would be the 3%, the 10-year yield. And you know, we failed 3%, and I think that's really the key inflection point. If we stay below 3% on the 10-year yield, then I think that, you know, interest rates are going to remain low. And if we get above 3%, that's really going to be a game changer. So I think this is really the key level, as I've mentioned going back the last couple of videos. So as long as we stay below here, you know, interest rates are going to stay lower. If we get above this this key inflection point, this key line in the sand around 3% in the 10-year, then I think, you know, that's going to be a bit of a game changer. And I think we've got room if we do get above that, which it doesn't look like the powers that be want us to get above there. But if we do get above there, then we'll be looking at, you know, 4%, 5%. I think 6% is really, if we can get up to 6% interest rates in the 10-year, I think that I think is where we're going to find a real sort of negative effect in the economy. That's just my opinion. But I think we've got some room to go, you know, another percent and a half higher. It shouldn't really affect too much. But if we start getting, you know, above 5 and then into 6%, I think that's really going to, you know, I think that would really drag on the economy. And I think that that's why the powers that be really want to keep these interest rates below 3% on the 10-year, you know, just to try and continue to stimulate the economy. So I hope that makes sense. That's all I'm really going to cover today. And if you have any questions, as always, feel free to email me through the meetup group where this announcement goes out, or you can also email me, dave@markettradingconcepts.com. And you know, you could take a look at our website, see what we do if you're interested in joining. We do have a desk open in the live trading floor. So we'll look forward to hearing from you. Good trading, good investing, and see you at the next update, or see you at an upcoming meeting, which we'll be announcing over the next week or so. All the best.